GWHC could be compared on the same level as HUT warrants should trade already today about $3 or $4 instead of 1.76, and that is just alone 200 or 300%. Hi, this is Money Mike. I know that a lot of people who are watching this channel expect me to do a video about Hyliion, which I eventually probably will, but this video is not it. If you will wait, we will get to that. But first, let me talk about this stock that I just discovered. I wanted to invest in Bitcoin from probably March 2020, but back at that time, I still had some uncertainties. Then over time, I became sold on the idea of Bitcoin and potential of this technology, slowly being more and more sure that this is something I want to be actually part of. And I'm sure that many of you and many institutions are on the same path of discovery, and this is one of the many reasons why I think that Bitcoin is going to become part of every portfolio, because the technology is simply too good to be ignored. But back then, there was one problem. I never saw a good opportunity to get in. I never felt I was one step ahead of others. And this is when I first started to pay attention to Bitcoin other bets, like MicroStrategy, which is a company that holds the majority of their cash in Bitcoin and since then started to copy Bitcoin charts. But at the time I found out about this MicroStrategy asymmetric opportunity, the opportunity was already gone. And now I actually believe that I found another Bitcoin opportunity that is not priced properly. But more about that in this video. So let's get started. Okay, today I will talk about a Bitcoin mining company, Cipher Mining, that is nearing going public through the merger with Good Works Acquisition Corporation, which is a GWAC. The GWAC SPAC raised about 150 million. Later on, we will probably get into the investor presentation, but for now, let's take their word for it. That what they're saying is that they want to become, Cipher Mining is aspiring to become the biggest crypto mining company. And Cipher Mining is headed to IPO, so it is most likely going to be overvalued as every other SPAC. And this will be part of the analysis in this video. And the second part of the video is how are current mining companies valued and where is the asymmetric opportunity that I personally see. I will not cover the basics. Anyone can, read the investor presentation. But there is one thing which really struck my eye and should strike you if you are interested to invest in this company. The question is Cipher Mining actually worth a penny? I will talk about first the elephant in the room, which is that the Cipher rollover equity is worth $2 billion. So the company that you are going to invest in is worth $2 billion. I'm going to smack them for that and whatever I say right now, I have from investor presentation. So if there is more to that valuation, I guess they should just put it in. Anyway, this is basically what they did. Let's say Bitfury, which is the company who is actually selling the hardware to the mining companies, created a new company. They made one of their employees the CEO in charge, and they said, well, this new company is going to mine Bitcoin, and because we give that company all our knowledge, we will price this company not $0 because it is not worth anything, but we think it is actually valued $2 billion. This is how you overnight double your value of your company. So you simply just create another company and use the achievements of the first company and future projections to gain $2 billion just by creating a new company. The company value is actually fabricated from the potential revenue. The enterprise value of the company have no assets, no patents. It is only borrowing the history and employees from another company, and then they promise that they will execute. So I don't want to go into details because there is not much more into that. But they should, in the investor presentation, in my opinion, elaborate more on this topic, because from the investor point of view, this is very scary. So this might not be the company that we want, but maybe the one we deserve. It comes down to the question why I should believe they have the right interest to execute this new company. So the first thing why we should probably think that is $500 million from the PIPE investors probably means that those pipe investors saw contracts that you didn't. And then we have 50 million worth equipment from Bitfury. And then you have 2-year shareholder lockup period, which does not apply for a SPAC owner. So I said a lot of negative stuff. So what is the light at the end of the tunnel? And that is relatively easy $2 billion in enterprise value, which Bitfury will gain if they execute. But what really works against us is that if it doesn't work out, they're only going to lose realistically $50 million, because I don't include this $2 billion fabricated value and some maybe missed opportunity value. So they are not losing that much. Now, to move forward in this video, I will put all this aside and I will forget whatever I just said. And let's just focus on if they would execute and if they would grow, how Cipher Mining would be actually valued. Are they overvalued? And if so, by how much compared to their competitors? I cannot go into detail about how Bitcoin actually works. This video is simply to give you an idea about this trade. The rest is really just up to you. As always, I urge you to actually do your own due diligence, because cryptocurrency is famous for its volatility and it could easily lose money for you. So as always, this should not be considered an investing advice. So let's talk about Cipher Mining. Initially, I wanted to do a comparison with multiple Bitcoin mining companies, but to make this as clear as possible, I decided to choose just one of them. So we are going to compare tickers GWAC to HUT8 Mining Corporation, from one and only reason. It is the only Bitcoin mining company that have warrants. And if you know me, I'm all about warrants, as they provide a great risk to reward value. And I actually made a whole video about that. So if you don't know what it is, just check that out. So here are the key metrics, how mining companies are actually evaluated. And for that, I prepared a spreadsheet. So on the left side, we have Cipher Mining. On the right side, we have HUT8. And Cipher Mining, that is projection for 2022. And on the right side, we have HUT8, and that is projection for 2021. So all companies obviously have a market cap, then they have a stock price, and then we have the warrant price. What is specific for mining companies is that they are evaluated based on a hash rate. And hash rate, in short, is how much Bitcoin they can mine some specific time frame. And then they have a mining power, and then they have electricity costs. And then we can also take a look at balance sheet, and then we can talk about how much Bitcoin they are predicted to mine every year. So if you take a look at that, Cipher Mining is valued $2.6 billion today by the market cap, and HUT8 is $1 billion. The stock price for Cipher Mining is $10.06, and for HUT8 it is $9. Warrant price for Cipher Mining is $1.7, and for HUT8 it's $7.25. Now with the warrants come also the warrant strike price, so don't judge too early, as these numbers looks very disproportional. So Cipher Mining is predicting that they will have 15 exa hash rate, while HUT8 will have 1 exa hash rate, which is a 15-to-1. And then we have a mining power, and Cipher Mining is predicting that they will have 445 megawatts mining power, and HUT8 will have 109, which is about 4 times 4-to-1. And then we have electricity cost, which is very important if you evaluate profitability of mining company. And Cipher Mining is saying that they will have significantly lower electricity cost megawatts per hour than HUT8. And then we have balance sheet, and Cipher Mining currently have $500 million that will be used as a capex for infrastructure and equipment for 445 megawatts hour. And then we have HUT8, which already have all this equipment in place, and they also have a balance sheet worth of 3,000 Bitcoin, which is probably $150 million. Then they have in their books $40 million equipment, and then they have $29 million debt. So, and based on that data, we can predict that Cipher Mining will probably mine 10,000 Bitcoins per year, while HUT8 will mine about 2,500 Bitcoin per year. So if I would weighted this data that we have here, we would be probably talking about the bottom price with the today price of Bitcoin, this company, Cipher Mining, should be worth, when they have everything in place, about $3.5 billion. And that's probably the lower pricing, right? If I didn't count anything what we said before. And the fair stock price then would reflect it for $14.6, which is 30% premium for today's price. And then we calculate what would be the fair warrant price. And we will talk about it in the second part of the video. Here's some really interesting part about comparing HUT to Cipher. Bitfury is a stake owner at Cipher and equipment supplier. But also Bitfury owns approximately 47.6% of HUT8, and HUT8 uses fully Bitfury technology, or at least was in 2019. So these two companies could be the best to compare because they will be built on the same technology. So here are some of my observed threads from the presentation. It seems like Cipher very much relies on the new ASIC chip Gen 8 because the timeline is copying the release of mass production of this chip. And let's face it, some delay in the timeline is very likely to happen because of this chip. And then price timing on this arbitrage opportunity that I'm going to present you could very much be delayed by this fact of delaying the chip release. And now we are getting to the point of arbitrage opportunity. So here's what I think. People, when buying SPACs, learn to evaluate SPACs warrants compared to the other SPACs, and that is totally sound approach. I think people who buy SPACs warrants are less aware of people buying options, and that apply also the other way around. I think people who are in crypto hardly even heard about this new SPAC, and more importantly, they are less familiar with what are warrants. Now let's talk about HUT warrants compared to GWAC warrants. Before we get into the math, keep in mind that GWAC warrants are much more regulated than HUT. Now, to the numbers. HUT8 offered units for $1.8 with one common stock and one warrant. Each warrant with 18 months period possible to exercise price of 1.8 Canadian dollars. Warrants started to trade at $0.12. No worry, I tried to decompose this for you. If you buy a warrant for a premium $0.12, you have to then exercise the warrant for the price 1.8 Canadian dollars. That means that if investor would exercise warrants bought from the units immediately after the day warrants started to trade, instead of paying $1.1 at the same day price, you would pay $1.9. So you would pay today 74% premium for that option to buy the stock cheaper in the future. The premium is paid really just for the leverage that you are getting on common stock. And now this is interesting. In just a matter of 24 days, HUT8 warrants started to trade approximately for $0.24, with commons still $1.1, which created premium 94%. That premium you should pay for the leverage just 4.6 compared to before 9 point something. So while the premium went up, the leverage went down significantly. And then when you see the common stock meeting the warrant strike price suddenly became in the money, and for that reason the premium significantly dropped down because of the lower risk. And that is what you can see in these two lines, 18th of January and 15th of March, where really the premium that you pay is 5 to 3%, and the leverage you get is in single digits, 1.25 or 1.15. Now let's compare this to Riot Mining Company options that are also out of the money and have similar years of expiration. For those who don't know, options are very similar to warrants, but they have some, differences in them. Again, as you can see, for something trading out of the money, you pay a huge premium with a very bad leverage. So in the words of options, you risk a lot, but you gain very little. So with the Riot options, you have stock price about $50, and you have options costing you just for having the leverage $22.45, which is 56% premium with leverage just 2.2. Now we are going to take a look at our SPAC GWHC. SPACs in general have been hammered lately a lot. Now let's look at the Cipher, aka GWHC, and how less premium you have to pay to get 3 times better leverage. So we will take a look at the stock price, and that's $10.6, and the warrants for 5 years with accessibility $11.5 is $1.76, which you pay premium only 25%. And the leverage that you get is 6. So if you're asking why options trade for such a huge premium, it is because it's Bitcoin volatility. Volatile options tend to trade much higher because they represent for the issuer more risks. So what you should take away from this? Well, people with crypto love leverage. These are individuals that are so bullish on Bitcoin that they are ready to take an extreme level of risk with slightly better leverage. You can see the same thing with Bitcoin, where for buying options just for the Bitcoin, the leverage is also 2 multiple. By the way, on January 11th, 2021, Huff issues another private warrants, and you can see how the conditions in just half of the year change from 1-to-1 warrants to 2-to-1 ratio warrants, significantly worse deal than just half year ago. So here's my hypothesis. If only GWHC could be compared on the same level as HAT warrants, should trade already today about $3 or $4 instead of 1.76. And that is just alone 200 or 300%, while you still have the upside and exposure to Bitcoin gains or losses, depending on how Bitcoin will perform in the future. Sorry if it got too mathematical, but this is how arbitrage is calculated. There is simply no other way than throwing a bunch of numbers and tables and trying to see the differences between the numbers. Now, the big question: will price of GWHC warrants change, and if it will, when it will change? Well, that is a good question. It could also happen that the market will never see this arbitrage and these warrants will trade independently to the market. This is something we cannot control, but my theory is that the market inefficiency is over time noticed and disappears. On the other hand, the arbitrage will become clear once GWHC common stock will double, which it very possibly will if Bitcoin will go to $100,000. So I personally see a multiple catalysts. First is the merger of GWHC becoming ticker Cipher. The second is the company starting to actually mine Bitcoin as a proof of the concept, which should be first quarter of 2022. At the end of the video, I want to just point out the bear case. In this video, I'm not trying to answer the question whether or not crypto mining companies are overvalued or not. Chances are that they are highly overvalued. I simply compare them with each other because I'm trying to point out the arbitrage trade. However, if things go ugly and we would have to ask, fundamentals of those companies, your investment is at high risk. And that's because mining companies kind of sucks. Most of them are unprofitable because every mining company is in the rush of deploying more hardware, and it is like chasing the wind. You are never going to catch it. Also, anytime Bitcoin miners have a good profits, everyone notices that and more competitors rise and there is more hash rate. There is nothing proprietary about mining Bitcoin. You are literally paying the mining company to buy a miner, plug it in, and sell Bitcoin for you. Of course, there are technicalities, cost optimizations, but at the end of the day, the assets are the hardware. And you pay for the premium for that hardware just because it is exposure to Bitcoin. If there wouldn't be crypto, this company would shrink maybe into 1%, 10% of its value. So the summary, I'm not suggesting that this company is great. By far, I'm not suggesting that. I'm not suggesting that this is the best company to invest in. The only thing that I'm suggesting in this video is that warrants and potentially soon options are comparatively cheap given to the future of this company, and as this company will be fully operational, it is very likely that it will be priced equally to its competitors. Also, I have to repeat that the arbitrage I see in this trade is not in commons. Just buying Bitcoin is a better deal than to buy GWHC commons. I like the idea on the leverage instrument like warrants and options with these mining companies, which GWHC might have options soon, by the way. And as for the news, I'm very happy for Hyliion finally reaching out to Ab and Bev and them responding and cooperating with Hyliion. That is a huge news because it's a big company, the frontier definitely with the sustainable energy. So I'm happy for that. And we were actually talking about it way back then, that they might actually switch to Hyliion, and this is very much happening. So I think this is where really Hyliion is taking over the Tesla and Nikola customers and slowly getting them on their side. So that is just great news. I don't understand why price doesn't reflect that, but I don't much care because I see the value in the company, not really in the stock price. And with that, see you guys next time.